All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Monday, February 12th, 2018. Let's look at the market. It's popping pre-market off of Friday's hammer. So really strong hammer yesterday after testing the old high here. If we look at the Qs, you can see the low basically came to the October high, especially we notice it on SPY where we got exactly to the 200-day moving average test, bounced intraday, and then also was a test of this range in here, looking very strong. And then we're up at one point pre-market, we were up around 1.4, 1.5%. We're down under 1%, but still a nice little pop. That's what we want to see. We want to see continuation now. Now, the mistake a lot of traders made last Wednesday when we saw this move here, and I got a lot of emails, got on the phone with some people who are having a tough time because they got over leveraged here. When you see these bounce signals, don't bet the farm. What we're going to be doing is we take one or two positions like we did on Wednesday, where we took LABU and we took one index play. And if the market continues, then we add. We're not going to bet the farm on the first indication. So we had that failure here. Now we're having a second test of a reversal. And basically we're going to watch here. We took TQQQ on Friday. I put the wrong price down. I was looking at the Qs as well in my long-term account. I took the Qs. So it's 135, not 155. So you can make that correction from Friday. But we took that position. Now, if the market continues, we can add here. So basically, we had the hammer. We take one position. We weren't going to bet the farm and make a huge guess here. Now, if we hold this level today and we don't pull back here, which we very well could, and we could do a lot of retesting. It doesn't often just bounce straight through. We get some retests. But if we get a hold, maybe we add another one. Then if we clear this range in here, so we're going to watch this range between the 9 and the 50 very closely. If we clear this range, we add again. And then up here, if we fill this open gap, we add again. And then if we were to break to highs, we add again. And then we go back to our normal trading. So that's the idea here. Slowly step into positions. Don't take huge positions right now. We are very oversold. If we look at the T2108 indicator, which is a good oversold indicator, stocks below their 40-day moving averages. If we pull this thing out and go back a few years here, we're at very extreme levels, and the market tends to bounce when even we get to 15 and 20 here, and we're all the way down to 6. So this is the most extreme level we've had since 2016. Then we had another one here in 2015, and this goes back to October 2014. So this is about the fourth lowest level we've had in the last 4 years. So this is a good spot to potentially bounce. That's basically what this is telling us. But again, we're not going to bet the farm on it. We are building a pretty decent sized focus list for longs this week. Let's start to go through that. SOX L, semiconductors, bouncing off the 50-day, and you're going to see the same thing over and over again. NVIDIA actually showing relative strength. It already bounced on Wednesday and didn't give up those gains. So we really like stocks that have shown relative strength like NVIDIA. Urban has done the same thing. A lot of the retails have shown relative strength. Coles, I could put a bunch of retails. I've only put 3 because we're not going to take that many positions. So Coles looks like it's putting in a kind of a double bottom test here at the 50-day moving average. Then we've got BKE as well. And there's a bunch I could throw in here. I chose 3 with different patterns. So we had the big oversold one, we had the relative strength, and then we have what looks to be kind of a reverse bottoming formation here in BKE, or a reverse head and shoulders. If it clears the 50-day, that would be the signal. And we've got room all the way up to 25 before it hits resistance. LABU, very big hammer on Friday. Look for continuation over the 50-day moving average. Then 2 relative strength stocks, Twitter and Snap. And when I say relative strength, if you didn't know what the market was doing, you would never know the market was collapsing here. If you looked at Twitter and if you looked at Snapchat, both have ignored the market pullback. And that's what we like to see in these stocks. So Snapchat, Twitter, a couple of other relative strength plays. And that's what you're seeing in the focus list here. Either stocks that have kind of done what the market did and are putting in the bounce formations, or relative strength stocks like retail, Snapchat, and Twitter. FAS, very similar to the market. Remember, financials are in play because of raising interest rates. That's always good for banks. So we've got the hammer in play there. And think about that one for those of you guys who are looking long-term, for long-term positions. I think the Qs are good for long-term. SPY is good for long-term. Financials are good for long-term. Facebook here, big hammer. I considered Facebook instead of TQQQ on Friday. Went with that one, but this is high on my list for today. We do have some moving averages that are pretty close, though. Then two metal plays, FCX. I'd like to see this clear the 9 before entering, and same goes for X as well. I want to see them clear the moving average ranges, but if they do, definitely jumping in there. WTW, relative strength stock, much like Snapchat and Twitter. Again, say to yourself, could I even tell the market was pulling back? And you wouldn't be able to tell if you looked at this chart. Baba and Baidu, two China stocks, have been hit hard. Watch for the clearance of those moving average ranges, and Baidu as well. So basically the same pattern in Baidu. And then military defense has been very strong. BA as our choice there, waiting for a move over the 9. So some pretty clear potential entries. Either you play the bounce or you wait for clearance of the moving averages that are now acting as resistance. And same goes for SPY and the Qs as well. So that's basically laying out what we're watching for this week. Very easy to tell where our entries are going to be. Continuation of the bounce and then clearance of these new resistance levels.